Hey, it's Clay Trader, and this will be a video chart on ticker symbol JNUG. We'll take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like a few weeks worth of time right here, it's actually just the past 2 days broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and in this situation makes mapping out a very logical question quite straightforward. Now, I did do this video on Friday, but I want to just kind of clean things up just so we can attack this logical question in a very hopefully straightforward manner. And the question revolves around the fact that today was a nice bounce. I don't think anybody can really argue about, relative to where it opened to then where it closed up there. Good solid day, but that brings up the question, but is there any sort of true power behind this bounce? Is there any sort of genuine strength, or is this just some sort of kind of knee-jerk reaction, dead cat bounce? In other words, a fake bounce. I have no idea, but the good news is, like I said, by using charts, we can make answering this question very straightforward. And in my mind, it all revolves around a single level. And that level is down here at this point right there of $6.70. Why is $6.70 so important? Well, hopefully we can all agree on the logic that price movements with true strength, with genuine power, the price is going to progress forward. The price is not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, it's not going to go back to where it was. So with that in mind, think about $6.70. Any sort of closes below it, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting the price right back to within this range where it already was. Again, going back, not a sign of true strength. Whereas let's say the price heads down here, bounces around, and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set down there, and if you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And again, that's the name of the game, right? Truly strong moves are going to make progress in that upwards direction. So 670 in my mind, very important level. In regards to levels of resistance, nothing new here. In fact, we just got confirmation of the level that I talked about on Friday, which is that red line there at $8. You can see during the bounce here, sure, it didn't quite hit it, but I think we can all agree got very, very close, right up within the range of that. So $8, as expected, is acting as resistance. Not saying the price can't break through it, but apparently, according to the history of the chart, was rejected here, was rejected back here. The bulls are going to have to bring their A game in order to fight through there. So interesting way to start off the week. We'll see if the bulls can build upon this momentum going forward. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate ETFs and stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.